Hi everyone, in today's update on Bitcoin, I will talk a lot about setups. How can you trade Elliott waves? Now I will cover my updated Elliott wave scenarios on the weekly time frame, the 4-hour and the 1-hour time frame, and per scenario, I will explain interesting setups that I am personally looking for and my reasoning behind it. Now the reason I want to do that in this video is because over the past couple of days and weeks, I more often got the following question. How do I execute trades based on Elliott wave probabilities, or at least the directional bias that Elliott waves is giving me? Now, mind you, Elliott waves can be traded in many different ways. You can just trade Elliott waves as pure as it is, which is what I do, but you can also trade Elliott waves with additional tools, which is what I do as well. Now there is a ton of different setups with Elliott waves. There's many different entries and all of that stuff, and I don't even cover risk management. I'm not going to cover where to put a stop loss and a take profit. It's mainly about where do I enter things based on Elliott waves. And then again, there is many different setups that Elliott waves gives. So in this video, I will just give you a bit of a hint on certain approaches that can work at the moment. But basically, if I would do a deep dive into trading Elliott waves, it would be like a whole series by itself, which goes way too far at the moment for just one video. So we're going to start with the weekly time frame Elliott wave scenario. This is the one that we are looking for. We're still looking for your 4 here and 5 towards the upside. Now, when we know Elliott waves, we know that a wave 4 of a higher degree likes to retrace to the wave 4 price action of a lower degree. So generally you expect a retracement to at least inside this range, 109 to 74. But that's quite big. So what I like to do is then look for some additional areas of support in this case. And I have 3 high time frame areas of support. These are coming from the simple volume profile that you can use. So we have a level at 107.7, 105, and 96K. Now, preferably, wave 4 ends at one of these levels. And when I then open this folder here, then from a trading point of view, as the probabilities are highest, we are still looking for more all-time highs and price moving to the upside. From an investing swing trading point of view, it makes sense to look for long opportunities. Now, of course, there's many different ways, again, to trade Elliott waves and manage stop losses. We know that preferably you're not going to move below 74, but of course one can arguably move stop losses as well to the next entry. So enter at 107.7, stop loss at 105, new entry at 105, stop loss at 96, new entry at 96, stop loss somewhere below, right? Like, you got to know where to put your stop loss and how to manage this, but that is different for everyone. And again, I don't want to cover things in detail. I'm not a financial advisor, just want to give you a hint. So just because the probabilities are higher, we're looking for a move up, we can look for high time frame areas of support, and those are going to be interesting areas for entries. Now then we look for wave 5 to the upside. Preferably, a wave 5 to the upside starts with a multi 1-2, similar to what we had over here. Bit of a grinding upwards structure to the upside generally forms a bit of a diagonal looking structure, and then you get your wave 3. So this is preferably what we see. Get your 3, then your wave 4s and 5s, end of the bull market, price turns around. Now you aim to enter, if not entered, somewhere over here. Of course, again, there's many different ways of trading, but you preferably enter in your 1-2s and you exit in your 4-5s. It's not necessarily about trying to snipe the low and ride the whole move up and then exit again at the tippy top of the bull market. Basically, your main profit is this area here. It's your wave 3. That is the main one that you like to have. That's your entry area. This is your main trade. This is your exit area. Now the moves towards the upside locally should be 5 waves up, 3 waves down, so that is something to pay attention to, but more about that once I talk about the 1-hour time frame. And then this should be your high volume move towards the upside. Now this structure to the upside then of course can be traded with more local setups. We'll figure that out once we actually get this structure. But you then get your 5 wave up, as mentioned, a 3 waves down, and if a 3 wave move to the downside is basically confirmed, that is the moment an entry can be taken and you look for price to move up, at least take out this high, right? That would be oftentimes at least like a TP1 or something, and then hopefully price just continues to the upside. But you got to manage it well. Goes too deep for this video to talk about all of the management and all of that stuff. Now after your 4-5s, one can look for short opportunities. Of course, it's high risk to try and short the top of a bull market. because your wave 5s can still at times be pretty lengthy. But just like we had over here, you get your 1, 2s, 3, you start moving sideways in 4s and 5s, it becomes interesting to then look for price to turn around and create a structure back to the downside, right? So that of course can be the same over here. We'll see how price develops once we get it. So let's go to the 4-hour time frame. And on the 4-hour time frame, we're gonna start covering here, which is your like bullish scenario. So in this particular scenario, we then have a WXY to the downside that is finished, and we're looking for price to move up. Now you can see that the structure here is actually quite similar to what I showed on the weekly time frame when looking for a wave 5. Now this methodology is what we call Elliott Wave Simplified, and this is specifically is the trend and turn methodology. Right, now more info about this, I'll link it at the end of this video, but it's the simplest way to use and trade Elliott waves, really. And this is a 26-minute video that basically covers this in detail, plus a lot of examples. So I recommend it. Make sure to check it out at the end of this video. I'll make sure to link it. So here on the 4-hour time frame, if this is your low, you're looking for price to move to the upside impulsively. Now this range then internally has to be a bunch of 1, 2s. We cannot count all of this here as a single diagonal, all of this as a single 1, 2, 3. Also doesn't work nicely, so preferably you would then somehow count a multi 1, 2 in here, either a double 1, 2, or you're looking for even a triple 1, 2. It's a messy range, no need to go in detail, you're looking for a multi 1, 2. Then you have your wave 3 to the upside, couple of 4, 5s, and your 4, 5s, and then look for a retracement to the downside. Now alternatively, you can see what we have here, which might possibly be even more interesting looking at the move towards the upside, where you get your 1, 2s over here, but you create another 1, 2, 3 for the bulls. Right? So you then have a 1, 2, you get a 3, 4, and a 5. After 5 waves, look for a corrective retracement, which then gives an opportunity. So if I then turn the setups on, then first of all, this is the one I'm in right now. I explained this yesterday. So this is the trade that I took yesterday here. 3-wave move to the downside, confirmed when price took out this high here. Reason being, this range was too long to really be a wave 4 or to be a second wave 2 for a multi 1, 2. I go a bit fast here, but I explained it in the video yesterday. So that was basically the entry. Stop loss was below here. Price moves up. TP1 was taken here. Stop loss break even by now. And basically we are approaching some more resistance, so it's interesting to keep an eye on what price does and take some more TPs and whatnot. But that is the one I am in at the moment. But looking at new opportunities, these are the two that are interesting. We are on a 4-hour time frame, so of course on a 4-hour time frame you got to be more patient. No, so basically a long opportunity would be waiting for price to retrace again, not buying in a pump. Now it might work occasionally, buying in a pump and price moves up, happy days. But it also cannot go very well. And this is what will happen more often than not, right? People see price moving, they're like, oh, there we go, new all-time highs, and then up, stop loss hit, liquidated, all of the good stuff. So here we want to see that 5-wave move up, a 3-wave move down, preferably confirmed, a 3-wave move down, takes out this high, comes back down again into support, opportunity, look for price to continue. If price pushes up to the upside, you don't have to be part of every move if you're not yet involved and there's no setup. Of course, on a 15-minute time frame, there's probably setups here more than enough, right? But I'm covering the 4-hour. Price moves up, we move sideways here in a sideways range, have some resistance, look for price to turn around, which then can give a short opportunity on a 4-hour time frame. On the 15-minute time frame, basically what I keep an eye on at the moment here is the following. Impulse to the upside. Now, yesterday, basically in the update section, I was sharing, 1 second here, that is the analysis of this morning. So here we go. So price was moving to the upside, and I said, yesterday at like 4 p.m., I said, okay, this is something I am looking for at the moment. 1, 2, 1, 2, 3, 4, 5, get another range, and eventually get another leg up in 5. We're so close to the resistance that we have over here at like 115K. I would love to see it touched. So, and I also saw that the highest amount of volume here was coming in. We had volume coming in, but you can see that price was slowly getting some red candles again and overlapping. So I was like, yeah, I might be looking for a 4 and a 5 at least. So here we then have that 1, 2, 1, 2, 3, 4, 5, 4, and get another 5. Now, possibly there is an additional 1, 2, so to speak. You have 1, 2, 3, 4, and then 1, 2, 3, 4, and you get a 5 here. Then your 3 moves there, 5 moves there. You get another 4 range, and then a final leg up for your wave 5 into resistance, and then you expect a retracement to the downside. So that is something that I am observing at the moment because I really enjoy those volume levels, and we are at arguably some resistance, which is an order block that I have. So on the 2-hour time frame, you can see that there is this one green candle, maybe on your chart, on the Coinbase chart over here, green candle before the quick move down, works as an order block. So yeah, we are at some resistance. I would prefer the volume levels above, but at least there is a level here that I have, and so far it is respected. So now we are aware of it, I suppose. So yeah, something I keep in mind locally. Now then we get to the, I suppose, quote unquote bearish scenario, but actually still bullish. The probabilities are highest to still take out the all-time high. Probabilities are highest this move down is a corrective structure, not an impulsive motive wave structure, which increases probabilities to still move up. But it doesn't mean you have a finished corrective structure. You can get larger corrective structures, right? Now, this is a WXY double zigzag. You would look for a W, look for an X, look for a Y. Finally, price moved up to at least touch the 0.382, which is something that I've been talking about for a long time now. So it's nice to see price at least moved up. In both the WXY scenario as well as the bullish scenario, we preferably saw a bit of a move to the upside to at least the 382, and then we have to just tag along and see what happens. No, so in the WXY scenario, internally you look for a 3-wave corrective structure in an X and then wave Y to the downside. Now for a double zigzag, WXY, which is a sharp corrective structure, you don't want price to preferably touch the 0.7 and 119.3. It reduces the probabilities for a double zigzag, sharp corrective structure. If you do move beyond the 0.7, you would look for a more sideways WXY. Now if we look at a sharp WXY, double zigzag WXY here, then I'll show you a potential setup on the 1 hour in a second. But basically your wave Y trade is your weekly time frame trades, because you're going to move down into high time frame areas of support, and that is where basically the weekly setups that I mentioned earlier are going to come to fruition, right? As you're going to hit some of those levels to the downside. So therefore, at the moment, I don't have a setup specifically for this time frame. However, if I would cover one, then it would be cool. We look for a 5-wave move down. Wave Y has to be a zigzag in a double zigzag WXY. So you get a 1, 2, 3, 4, 5 to the downside. Then you get another 3-wave move, messy structure to the upside, followed then by again 1, 2, 3, 4, 5. Commonly, wave 3 has the highest amount of volume. Wave 5, new low on lower volume. And if that happens close to an area of support, can be interesting to look for an entry there. So that is like the thought process when looking at a 4-hour time frame compared to the weekly. But of course, on a weekly, you're going to move into high time frame areas of support. Now then we have the 1-hour time frame. So on the 1-hour time frame here, this would be for the bears, right? So this is the internal count basically for your wave X. So here you're looking for your X and then a Y down. Now, if we're looking for a double zigzag, then your wave X preferably is a shallow 3-wave structure. Now here on my chart, we would then have wave A, internally an impulse, 2 for overlap, no wave 1 for overlap, so it can work. Then we have a triangle in a wave B and then move up in wave C. Now after a triangle wave B and a zigzag, a common target for C is the 618 and the triangle thrust. Now the triangle thrust here is a vertical line that you take from the low of A, that's your wave A, to the trend line of BD, this one here. So you move it up. You extend the trend line a little bit further because this vertical line goes to the trend line, not the high of B. It goes to the trend line. And then you put this vertical line on the end of the triangle, which then gives you a target. And this gives you your first basically target zone for a wave C in a triangle. So that's after a triangle wave C common target. Another target in general for zigzags is the 1 to the 1.236, so one to keep an eye on. If price continues up and moves to the 1.618, probabilities for a C decline. If you move beyond the 618 or the 1.618, you would look for a wave 3 and preferably an impulse to the upside. It's similar with like a channel. Generally, a zigzag is nicely contained in a channel, even though we have many examples where wave Cs move beyond a channel. It just happens just for the sake of an example, right? There's definitely examples. So here, this was an ABC to the downside. ABC on the lower time frame, you can see how long wave C is now. It definitely moved outside of the channel, but the main way to figure out if this is a C or a 5-wave structure is the move back up. Does it touch the 618 to invalidate wave 4? Yes or no? Goes a bit too deep for this video, as that is all price action. But here, if we would consider a channel for the zigzag, then your zigzag preferably ends somewhere at the higher end of this channel. It can move beyond it a bit, that's no problem, but somewhere over here is nice. If you really explode beyond the channel trend line on a high increasing amount of volume, you start to consider wave 3s again. Now, with the 1 hour time frame, trading wise, look, some people enjoy more risk. I preferably enjoy safer trading, but you know, everyone has their own risk appetite. Trying to snipe the high of a wave C is high risk, because we have the bullish scenario, which would be continuation to the upside. Now, possibly in both the bullish and this bearish scenario, you end a 5-wave structure here, as I explained when covering the 50-minute time frame, right? 1, 2, 3, 4, 5, touch resistance, get a retracement. So of course, it's a potential opportunity here, because in both scenarios, there might be a retracement there to come, but that's 15-minute time frame stuff. So on the 1 hour time frame, sure, one can potentially try and snipe the end of a C when approaching an area of resistance. Absolutely valid, right? But if we would look for a wave Y to the downside, because that's in the end, this is a scenario that adds to the 4 hour time frame WXY. Right? We're looking still for the bigger W, X, and then the Y to the downside. And we know wave Y should be a 535 zigzag family structure. And the safest option would be trading that B. So what we would then look for is a 5-wave move down. So you look for a retracement, 1, 2, 3, 4, 5, has to be a 5-wave structure. If you're looking for a bigger Y down, you need a 5-wave, followed by a 3-wave structure to the upside, messy stuff. Invalidation is the high, that's an opportunity, look for price to go down, minimum target, then take out the low, then see how far it goes. So that is a more safe opportunity. Of course, again, higher risk, can of course create a reward as well, looking for a retracement. It may be both a bull and bearish scenario, but in the bullish scenario, you would then look for a corrective structure to the downside and then a move up. In the bearish scenario, you're looking for an motive impulsive structure to the downside and a correction up. So that's the difference between the two. If you get that retracement to the downside in the bullish scenario, you want it corrective. If you get it in the bearish scenario, it has to be motive. That's the main difference between the two. No? So this then gives a higher probability, quite safe opportunity. You need a corrective move to the upside. Okay. Then we get to the levels on my chart. Interesting support and resistance levels. These are volume levels here on my chart. My favorites. I like these as horizontal support and resistance, so keeping an eye on these. Then we have a time frame horizontals. And I do have a few order blocks, at least on my chart, a few above here. I don't show this every time, but yeah, we're currently at a 2-hour one here. So, okay, now we also have some news. So today, Thursday, September 11th, 2:30 p.m. Central European Time, high impact news, trade safe, volatility can increase. And then we go to more like the conclusion, and not necessarily because of the way I recorded this video with the setups. I didn't really want to cover necessarily probabilities, but more explaining stuff also related to setups and the mindset to trade Elliott waves. And to begin with, I'm not a financial advisor. We're on YouTube. We're not in some financial advising, whatever corporate system here, a company, right? So I'm a YouTube guy. I analyze the charts. I trade the charts. I'm happy. You happy, doing your thing, right? You need your own plan. You need your own plan. Let me actually make this a little bit larger as well for everyone, right? If you think you can be long-term profitable, not having your own plan, and you're going to look at signals, copy trading, other YouTubers online or mine online and try to trade the analysis that someone else does, You are meant to be a long-term losing trader. I honestly 100% guarantee you, I believe in this, right? You want to be long-term profitable, you need your own plan, which takes time, takes effort. Trading is like building a business. You're not going to be able to build a business in a couple of days. It takes a long time, it takes a grind in order to eventually build something. Same here, you need a plan. Now, if you want to trade Elliott Waves, as pure as it is, you have to become a master at it, no shortcuts. If you want to use basic Elliott Waves just to know the directional bias, you likely need to use other tools to get an idea of entries. So if you're like, well, directional bias, this looks corrective, this looks impulsive, right? If you get an impulsive move up, for example, on the weekly time frame, right? Or at least I'm on the daily now, but the probabilities are higher. This move down is corrective, meaning longs are interesting. So at least your directional bias initially would be like, okay, it's interesting to look for long opportunities. No? And then you need some other tools to get proper entries if you don't have an expertise in Elliott Waves. Now I can combine the two, both pure Elliott Waves and using extra tools, because I have my expertise in Elliott Waves, right? And I also have expertise in the tools I use, but everyone is using different tools. You can use tons of tools, tons of things, whatever. Now, of course, probabilities can change. That is, trade management is important, of course. If you get a bigger diagonal to the downside at some point, way too early to talk about this, actually doesn't make sense, but I still cover it. Then in a corrective structure up, if one considers longs over here, but then you get a diagonal and a corrective move towards the upside, one can generally enter or exit again at break even or even a little profit. Anyway, mega random. So I personally trade both. So as you can see, based on this video, probabilities on a higher time frame give a directional bias that can be traded upside, but you need a plan, so work on getting that done. And if you want to learn how to build a plan, we have some tools in the Elite membership, which Linktree is in the description and stuff. And Hexaplan is coming as well, which is a platform we're creating to help people build a plan because it's super much requested. Also, you can see that you don't always need to know what happens next. On the 4-hour and the 1-hour time frame, we just wait to show what price wants to do and then react accordingly. As you maybe noticed on the 4-hour time frame, the WXY here is the bearish scenario. The bullish scenario is the impulse to the upside. Now, I have to say, when I look at this structure, I would personally give more preference to the WXY and another low at a later stage compared to the bullish option. But from a trading point of view, it doesn't matter because I'm not aiming to snipe the end of an X. I'm in a long and I look to take profits at areas of resistance. But because I know about the bearish scenario, I make sure that I take profit at potential turning points in case price turns around. Or I close a trade at potential turnarounds and I wait for a retracement or wait for more information to then enter a new opportunity. But we have the WXY, we have the impulse, and in both the WXY and impulse, preferably price moved up to at least a 302, but now we're there. And then locally, price will give us the information that we need. We can definitely count this as pretty much a finished or close to finished impulse to the upside, so a retracement sometime soon will not be a surprise. But then the retracement will give us the info. In a bearish count, we look for 5 down, 3 up opportunity. In a bullish count, we're looking for 3 down and then 5 up opportunity. So from a trading point of view, you don't always actually need to know what's going to happen. You don't even need to know always the probabilities of certain Elliott Wave scenarios. They can give you a bias, but the execution might not be directly related to your probabilities. You can wait for more information, wait for price to come to you for a more safer setup if you don't want to risk it, and that then gives you that entry that you are looking for. Okay. So you can wait for price to show what it wants to do, 5 waves, 3 waves, corrective, motive, and then react accordingly. One doesn't need to snipe highs or lows. Of course, there's ways to do that as well that I haven't really explained in this video, but it goes way too deep. This video is already 25 minutes. One can wait and chill, relax, let price do its thing, and then execute. No need to know upfront if probabilities are X or Y. Sometimes you just wait. If you know what you're looking for, you can wait for price action to just show it. People have a tendency to always be involved. They always want to be part of every little move. On the 1 hour, many people also trade very, very low time frame, which is fine. Everyone has their own style, scalping, day trading, or swing trading. But a tendency to be involved can also be related to having the chart open all day, but not having the mental control of letting price do its thing and wait for your plan to actually come to fruition. Tendency to be involved, sniping highs and lows, FOMO, add whatever you want. Those are also oftentimes destructive habits unless part of a proven plan. Sniping highs or lows can be part of a proven plan. There's many people in my Discord that know how to snipe highs and lows because they have a plan set in stone to make that happen. I think one of the best ones in my group is maybe a Band-Aid. He's also a mod on YouTube and in Discord, and he is great in sniping highs and lows, but he has a plan for this. For most people, it can be a destructive habit, as what they're going to do is they're going to try and, guess what? Snipe the low, 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 snipe the low. And what is their target? Their target is all-time high. No, and then no all-time high, no all-time high, no all-time high, no, 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 no. And at some point, you're going to be right after some 10 no's, right? So you really, really, again, need a proven plan based on data. That is something that Hexaplan helps with. Now also, I know some people like to have an update about the compendium. So I gave an update in the YouTube post section in Discord, and I'll just put this message out here so you can read this. This is currently what we're doing. This is the probabilities table, which of course is already filled in, but I had to remove this for the photo, everything that's in here. But this will give you, in the blink of an eye, an overview on the probabilities of Elliott Wave structures to make it super easy. Currently, the compendium is already about 70 A4 pages in size. The book that we are creating will be preferably hardcover and paper cover and ebook as well, or not paper cover, what's a soft cover and hardcover. And it will be A4. That's the goal, A4 printed, because of all the structures and stuff that we are that we have in the pages and all the graphs and whatnot. So yeah, I'm very, very excited. We're moving into the final stages, and I will keep you guys updated in the upcoming weeks and few months left. Hopefully we can publish it before the end of the year. That's the goal, basically. So we have an editor as well that's working on it. So yeah, this video had a lot of information, definitely one of the longer ones again on the channel. I just wanted to make sure I answered the question. Just to repeat, I mean, there's many different ways to trade Elliott Waves. There's so many setups that I use and ways to trade Elliott Waves. This is like the tippy top of the iceberg. And if you find this stuff interesting, like I am considering, especially next year, to move more towards really educating people on Elliott Waves in a more structured style. And then I can also discuss or create like a very, very big series or educational system on how to trade Elliott Waves and really go in deep dive into everything that comes to trading Elliott Waves, which is not just looking for entries, but it's all the different potential setups with their entries, their stop losses, their take profits, etc., etc. So, I mean, I would be pretty excited to make it, but you know, you can comment as well if you find that stuff interesting. For now, I will end this video. So I will quickly put the script that I always use on my screen. Make sure, by the way, to check out this video, right? I'll link it right now. So, okay, time for the end screen. Thanks for watching this video. Hopefully it was helpful and valuable. Now on the left, there you go, is the simplest way to use and trade Elliott Waves without even counting. I recommend that one. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing. Don't forget to hit that button, and I hope to see you at the next one. Bye bye.